A charity worth $850 billion is being unwound in real time into private fortunes. Its co-founder is now $30 billion richer. He invested no money, and his own diary calls what he was doing morally bankrupt. The charity is OpenAI. The co-founder is Greg Brockman. The diary is now exhibit evidence in a federal trial in Oakland. It would be wrong to steal the nonprofit from him. That would be pretty morally bankrupt. Brockman wrote that to himself in November 2017. The him was Elon Musk, the man who funded the charity Brockman was running. In January, Judge Yvonne Gonzalez-Rogers issued a ruling. The court could not dismiss the case, she wrote, because Brockman's diary entries could be read to suggest that Brockman intended to deceive. OpenAI started as a 501c3 charity. The 2018 charter said its primary fiduciary duty was to humanity. That language has been removed. This is not a story about whether artificial intelligence is good or bad. It is a story about a charity being unwound into private fortunes. California law has a specific name for what the document record is showing. The name is self-dealing. OpenAI was a 501c3 charity. Elon Musk donated about $38 million to the nonprofit in its early years, most of the money it had to start with. He turned down equity because there was no equity. It was a charity, which is a phrase that sounds like someone dropped a stapler on a tax form, but it matters. The 2018 charter was clear about who it was for. The opening line in the version filed with the IRS read, "OpenAI's primary fiduciary duty is to humanity." That was the contract. The 2026 charter does not say that. The phrase is gone. The word safely, which had appeared in every IRS filing, has also been removed. OpenAI has revised its mission statement 6 times in 9 years. The 2018 first-person commitments, "We will, we commit," were replaced with broader recommendations to the ecosystem. In 2017, Sam Altman, OpenAI's chief executive, personally paid Greg Brockman about $10 million in equity from his own private family office. Musk was not informed. He was, at the time, the charity's primary funder. The arrangement came to light because Musk's own family office head, a man called Jared Birchall, found it. On the 18th of August 2017, Birchall wrote to Musk. His exact words, now in the trial record. He compensated Greg on the side a percentage ownership of the LLC that holds the assets of Sam's personal family office, worth $10 million. And then this line. Naturally, Greg is going to have greater allegiance towards Sam as a result of this arrangement. Musk forwarded the email to Brockman. He added 2 question marks. The trial record shows Brockman never replied. That silence is the turning point. 2 co-founders of a charity. One has just paid the other $10 million in private equity. The third co-founder who funded the charity asks a question. Nobody answers him. A month later, in September 2017, Brockman wrote in his digital journal. Judge Gonzalez-Rogers cited that line in her January ruling. "This is the only chance we have to get out from Elon. Financially, what will take me to $1 billion? That is not the question of a charity director. That is the question of a man planning his cash out." 3 months later, on the 6th of November 2017, Brockman and Altman met with Musk. They assured him that OpenAI would remain a nonprofit. That same day, Brockman wrote in his diary that the conclusion of the meeting he had just had, was that they truly want the for-profit benefit corporation. Then he wrote the line that may decide the case. If 3 months later we're doing B Corp, then it was a lie. Then he wrote one more line. It would be wrong to steal the nonprofit from him. That would be pretty morally bankrupt. Judge Gonzalez-Rogers cited those entries directly in her January ruling. Her reading was unambiguous. The notes could be read to suggest that Brockman intended to deceive. That is the ruling that sent this case to trial. I drew a diagram. The diagram was judging me. Between 2017 and now, while serving as a fiduciary of the charity, Brockman acquired personal stakes in 4 companies that OpenAI then did business with. The companies are Cerebras, CoreWeave, Stripe, and Helion. CoreWeave is a cloud compute provider. OpenAI committed up to $22.4 billion to CoreWeave's services. Cerebras makes AI chips. OpenAI committed $10 billion to a Cerebras compute deal and loaned Cerebras another $1 billion. Stripe is the payments processor. OpenAI signed a $60 million 3-year contract with Stripe in June 2023. Helion is a fusion energy startup. In 2024, OpenAI agreed to use Helion's not-yet-built reactors to power its data centers. Brockman owned shares in all 4 of them. Court filings show he negotiated each transaction on OpenAI's behalf while holding the personal stake. Cerebras is the clearest of the 4. It is the chain you can lay out from start to finish. In 2017, Brockman acquired personal Cerebras equity at the same time OpenAI started discussing a Cerebras transaction. In December 2025, OpenAI signed the $10 billion Cerebras compute contract and loaned the company another $1 billion. In February 2026, Cerebras' valuation tripled from $8 billion to $23 billion on the strength of the OpenAI commitment. In April 2026, OpenAI expanded that commitment to $20 billion through 2029. That same month, Cerebras filed to go public at a valuation of $26.6 billion. The IPO is the cash out. Under oath last week, Musk's lawyer asked Brockman whether he ever told Musk that he owned Cerebras while pushing OpenAI to do business with it. Brockman's answer: "I do not believe an email that says that exists. No email, no chat, no text." The lawyer asked whether he stood to gain personally. Brockman: "I suppose so, but it wasn't something on my mind." His defense was that he had told another OpenAI board member. He could not point to any proof he had told Musk. Brockman testified that his personal stake in OpenAI is worth nearly $30 billion. He invested $0 to acquire it. Musk's lawyer asked it directly. "You just happen to be $30 billion richer." Brockman's answer was that compensation had been secondary to the mission. His diary, 8 years earlier, had asked what would take him to $1 billion. He has 30. Sam Altman also has a multi-billion-dollar OpenAI stake. The man who put up the original $38 million to start the charity, Elon Musk, turned down equity in 2015. He thought he was funding a nonprofit. The paperwork said he just didn't know what would happen to it later. This is not the first time we have seen this pattern. In 2019, WeWork, the office leasing company valued at $47 billion, filed for a public offering. Inside the prospectus, investors found something unusual. The company's chief executive, Adam Neumann, personally owned partial stakes in buildings that WeWork was leasing as a tenant. WeWork was paying rent, more than $100 million in future obligations, directly into properties Neumann owned. He was CEO, controlling shareholder and landlord simultaneously. He had also trademarked the word "we," then sold the trademark back to his own company for $5.9 million. He owned the W. A shareholder lawsuit filed that November described what had happened in plain language. Neumann had engaged in self-dealing while serving as a fiduciary. The SEC opened an investigation. So did the New York Attorney General. Neither investigation produced charges. By then, Neumann had already cashed out at least $700 million in shares and loans taken against his stock. SoftBank, the company's biggest investor, paid him up to $1.7 billion to leave $970 million for his shares, a $185 million consulting fee, and a $500 million credit line to repay personal loans. WeWork filed for bankruptcy in 2023. Its ordinary employees' stock options were worthless. The self-dealing had been disclosed. The investigations had been opened. The accountability never caught up. It is the same structure as the OpenAI case: a founder, a counterparty. an undisclosed personal financial stake. Investigators who arrived after the cash was already out. Last week, on cross-examination, Brockman was asked whether he understood the lawsuit against him. His answer: "I've honestly never really been certain what I'm being sued for." Pressed by Musk's lawyer, Brockman confirmed he had read the complaint, understood the claims, and stood by his words. The lawyer then stated the breach of fiduciary duty claim directly. Brockman's reply: "Oh, I just disagree with that." He had spent 5 hours testifying about the elements of the case. Then, asked what the case was, he said he did not know. The same day Brockman testified, Anthropic, the company that makes the Claude AI system, announced a $1.5 billion joint venture with Blackstone, Goldman Sachs, and Hellman and Friedman. This is the second part of the same story. Each anchor partner is putting up about $300 million, Goldman about $150. Backers include General Atlantic, Apollo, GIC, and Sequoia. Notably, 0 traditional consulting firms are in the cap table. The model is not consulting. It is what Palantir calls forward-deployed engineering. Anthropic engineers will embed inside private equity portfolio companies and rebuild operations around Claude. Consulting, but with more GPUs and fewer people pretending the slide deck was worth it. Anthropic's chief financial officer, Krishna Rao, framed the demand. Enterprise demand for Claude is significantly outpacing any single delivery model. Blackstone's president, John Gray, called it one of the most significant bottlenecks to enterprise AI adoption. Goldman's Mark Nachman said the venture would democratize access to forward-deployed engineers. The market is real. According to the venture's own framing, companies spend $6 on services for every dollar spent on software. That is a multi-trillion-dollar redistribution. The same day Anthropic announced its venture, OpenAI announced its own equivalent. Both are targeted at private equity portfolio companies. Both bypass the traditional consulting firms entirely. The same engineers who unwound a charity into $30 billion are now selling those systems into private equity. The redistribution that started inside OpenAI is being scaled outward. In 2024, the payments company Klarna replaced about 700 customer service workers with an AI agent of its own design. $40 million in projected annual savings. The chief executive announced it as a milestone in AI adoption. A year later, Klarna reversed the decision. Klarna's chief executive, Sebastian Siemiatkowski, told Bloomberg what had gone wrong. As cost unfortunately seems to have been a too predominant evaluation factor when organizing this, what you end up having is lower quality. The 700 workers were not redundant. They were absorbing complexity the AI could not handle. The customer satisfaction scores tracked the difference. Klarna is now hiring back on a remote, log-in-when-needed basis, like Uber drivers. The productivity gains did not survive contact with reality. The economist who has studied this most carefully is Darren Acemoglu at MIT. His term for what Klarna did is so-so technology. He puts the mechanism cleanly. Call center automation is not always more productive than people. It just costs firms less than workers do. The result is structural, not accidental. Automation always reduces the labor share in value added. Acemoglu's reading of the broader trend goes further. We're using it too much for automation, he says, and not enough for providing expertise and information to workers. That is the gap. Productivity is rising. Wages are not rising at the same rate. The difference is the labor share, and the labor share has been falling for 40 years. AI is not the cause of that trend. It is the accelerant. Acemoglu's frame is in the U.S. data already. The labor share of national income, the share of the economy that goes to working people as wages, has fallen to 54.4%. That is the record low in a Bureau of Labor Statistics dataset stretching back nearly 8 decades. The historical figure, from the 1940s through the 1990s, was 60 to 65%. Productivity in the same period has been rising. Real hourly compensation rose 2.1% over the last 4 quarters. Productivity rose 2.5%. The gap year-on-year is the redistribution. Multiply that gap by 40 years and you get the country we now live in. Shareholders and asset owners are doing well. The labor share is at a record low. AI is being used in the Klarna pattern to cut costs by cutting workers, not to make workers more productive at the things workers are good at. The pattern is older than AI. In May 2000, a financial analyst named Harry Markopolos submitted a memo to the Securities and Exchange Commission. The title was straightforward. The world's largest hedge fund is a fraud. He had worked it out in 4 hours. He submitted again in 2001, again in 2005, again in 2007, again in 2008. The SEC found no evidence of fraud. Bernie Madoff was arrested in December 2008 when the scheme collapsed on its own. 9 years after the first submission, approximately $65 billion had moved through his accounts. The money was gone before a single charge was filed. WorldCom disclosed its $11 billion accounting fraud in June 2002. Bernie Ebbers was convicted in March 2005, nearly 3 years. By then the company was bankrupt. 180,000 workers had lost their jobs, and every shareholder had been wiped out. The OpenAI charter rewrite did not happen in a courtroom. The Cerebras stake acquisition did not happen in a courtroom. The $30 billion personal stake did not happen in a courtroom. All of that happened while the institution was still a charity, between 2015 and 2019, years before a judge read any diary. That is the speed asymmetry. It is not new, it is just bigger now. The cost of AI is being calculated in 2 places at once. The first place is OpenAI itself. The complaint Musk filed describes a 501c3 created in 2015 to develop artificial intelligence for the benefit of humanity. By 2026, that charity is worth $850 billion. Its founding charter has been rewritten 6 times. The phrase, primary fiduciary duty to humanity, has been removed. The word safely has been removed. According to court filings, Greg Brockman holds a $30 billion personal stake in OpenAI. He served as a director of the charity while owning equity in 4 companies that, the complaint alleges, the charity has committed more than $30 billion to. The complaint also alleges Sam Altman holds a multi-billion-dollar stake, paid for, in 2017, with a separate $10 million arrangement on the side from his personal family office to Brockman. A payment Musk's own family office head said in writing would give Brockman greater allegiance towards Sam. Musk did not learn of it until that letter was forwarded to him. California law has a name for what the plaintiff alleges. The name is self-dealing. The second place is the rest of the economy. Anthropic and OpenAI have launched parallel ventures to embed forward-deployed engineers inside the portfolio companies of Blackstone, Goldman Sachs, and Hellman and Friedman. Klarna spent a year proving that the productivity gains from replacing 700 customer service workers with AI were not, in fact, productivity gains. They were a quality cut, measured in customer satisfaction scores. The labor share of the American economy is now at the lowest level recorded in 8 decades. These 2 places are connected by a single mechanism. AI value is flowing toward capital owners faster than the legal and economic structures designed to redirect it can react. There is no version of capitalism in which fiduciary law is optional. Lucian Bebchuk is the Harvard law professor who has spent 30 years documenting what happens when legal accountability falls behind the pace of capital formation. In a 2019 Georgetown Law Journal paper, he identified the mechanism precisely. Founders use what he calls midstream reclassifications, charter amendments, new share classes, non-voting stock dividends, to reduce their cash stake while holding onto control. The problem, in his exact words, courts have yet to decide the permissibility and appropriate level of judicial scrutiny. What that means in practice: the governance contract is set at IPO, the extraction happens later, and by the time courts establish the rules, the money has already moved. In the OpenAI complaint, the fiduciary contract was set in 2015. The for-profit structure was introduced in 2019. The secondary share sales that the plaintiff alleges crystallized Brockman's stake happened in the years between. Judge Gonzalez-Rogers did not read the diary until 2026, 11 years. Real markets, the kind that built wealth in industrial democracies, run on accountability, disclosure, and consequence. Capitalism has remedies. A nonprofit that breaches its mission can be unwound. A director who self-deals can be removed. The mechanisms are functioning. The case is at trial. The judge has read the diary. What this trial will determine is whether the law works in time. The remedy is not less capitalism. The remedy is fiduciary enforcement that catches the equity before the equity is gone. The trial will decide who pays. By Elon Musk, who funded the charity and received no equity in the for-profit conversion. By the public, on whose presumed behalf the charity was structured for 9 years. The other cost, the broader cost, will be paid in customer service salaries, in stagnant wages, in a labor share that has been falling for 40 years. AI did not create that trend. It is accelerating it. The fiduciary protections were written deliberately after specific failures. They were written by people who had watched what happens without them. This trial is what they look like working, slowly. This trial will set a precedent. If it lands, founders answer to the same legal infrastructure as everyone else. If it does not, the rules that built the country are now optional for the people building its most powerful technology. The law is not broken, it is slow. And slowness, when the other side moves at the speed of equity markets, is a form of failure. If they are not, the United States has decided something larger about itself than this case. It has decided that the rules that built the country are now optional for the people building its most powerful technology. That is the question this trial is actually asking, and it is being answered right now, in real time, by what the courts allow to stand. If this changed how you see your next receipt, your next bill, your next upgrade, we did our job. Like and subscribe, we have more to show you.